Hi traders, and welcome to the Technical Analysis Market Wrap on the 22nd of October. So we've seen a couple of good moves this week. We've seen the majors are certainly moving along, and the key indices are actually starting to break to new highs again. So we'll jump straight into the markets and see if we can identify any trades for today and early into next week. We'll start out here with the Aussie USD. It's had a really big move this week. Like you can see that, especially the previous 2 days before this last pullback were very strong, and it actually blasted past areas where really in a normal market you would have expected it to actually pull up here a little bit and actually take a bit of a breather, but it actually blasted through there like it wasn't there. The candle just completely continued on. This is a daily chart, so pretty serious time frame, and realistically it probably did a little bit more than it should have given what the other pairs did in the major sector. But look, it certainly had a bit of a rebound. Now look, it got to as high as, it was nearly 75.50, but it's pulled right back now, basically nearly 100 pips. So we expected it to actually stop here. So now what it's done is basically tested the top end. It's a make or break zone for it now, in that if it doesn't actually reverse here, it's probably going to come back all the way down to that 73.50 area, or at the very least the moving averages. So it's a bit of a, now that it's actually done that, it needs to either find some support at this level, which will be a role reversal now, like it blasted straight through the first time, and we would probably expect that it's going to do a bit of a role reversal if it's going to continue up. Now if it does that, it turns into a pretty good trade on the way up. So in order for it to actually do this, what we need to do is go to the smaller time frames, of course, and wait for a series of higher highs and higher lows on a 1 hour or a 4 hour chart. The 4 hour is not really doing that for us, but the 1 hour is basically lightning bolting on the way down now. So what's going to have to happen is it's going to have to reverse itself from around this level here. If we get that series of higher highs and higher lows on a 1 hour, that'll mean it's broken up above the moving averages again, and that will be a pretty good trade for the long. So, and then the good thing about this, of course, is it's set a target already. So it's got the easy money is the way up to where it's already touched most recently. So if it does reverse from this point on, we know we've got a pretty easy target to aim for, very straightforward. Failing that though, if it does continue to fall and break through the 74.50 level, then we're really probably heading back down to the moving averages. And at the first instance, the 20 moving average will be the target, which will be the peak of these highs here, which is not a lot of pips away. It's only about 50 pips away. So it might be a bit of a scalp. So you might be wanting to look at a bit of a scalp on the Aussie down to the moving average if we actually get a continuation of this lightning bolt. So if we get a break of this level here, this is the level we're going for, okay? And if failing that, if it turns around from this level here, we're aiming for the highs at around 75.50. So both legitimate trades, and both of them are pretty comfortable in my mind. I would take either one if the market presents itself, but it's just a case of waiting to see what it does at this key level here. All right, we'll move over to the US dollar CAD now. This has been a big move. Look, it was starting to round, even yesterday and the day before, we could start to identify a little bit of slowness in the momentum going down. It was very strong all the way down here, but you could just start to see here in the last couple of days of trading that we started to slow down a little bit in our movements, okay? You can see the MACD starting to rise. These are the clues that you've got to look out for when a market is falling quite heavily. What you're starting to look for is that rounded bottom type effect, especially when the moving averages are starting to basically pick up a little bit of speed to get closer together. So you can see the histogram here. This means that the 12 and the 26 moving average are starting to get closer and closer together again. So the momentum is starting to shift, and you can see that in the price. Price is starting to slow down a little bit, and it's had a pretty reasonable pullback now. You can see that big hammer candle at a key point of support. You've got to go out a fair way to actually see why this is support. This is why we always encourage people to go out to the bigger time frames, because if you see here, this is the exact area where we're at. You can see that it was a very key support zone here as well. This is a weekly chart, so that was support there for effectively the best part of a week at some point in that period. So you've got to respect it, and what we're looking for now is, of course, a bit of a break up. So what we've got now, the 4 hour, because it's been such a big fall, what you want to be looking for before you start taking the long seriously is a series of higher highs and higher lows on a 4 hour chart, because that means that price has had a chance to consider what it's going to do and respect both levels. So it's really important that we give it a bit of time. You don't want to be just jumping in on this one unless you're actually scalping. And if you're scalping, that's perfectly fine, but you've got to make sure if you're going to go for a longer term pickup, you need to wait for a lightning bolt change of trend to make sure that the momentum has shifted. But signs are very good. This candle is a very good candle at a very important point, and now it's starting to really move up on the 1 hour. Like I say, we've got the lightning bolt Okay, so what we want to see now is a pullback probably to the 20 moving average around this level here. I'd like to see it come back to around this level. The moving average will hopefully catch up shortly, and that will be a great launching pad for it to go. That will give the 4 hour a chance to get moving as well, and could be some seriously good trading up until about that 125 area again. There's a couple of really good zones on this one. This is the first one really. The 124.50 is probably the very key zone that I'd be taking profit on if I was going along on this one. But not bad. The CAD's starting to play the game again. All right, we'll go to the US dollar yen. Now this one got tired. Look, it's had a big bolstering move. We know the 114. We've highlighted it over the last few weeks why it was so important. Hopefully all of you guys got hold of this trade because we've been talking about it for long enough. So hopefully you're able to catch that big move up to the 114. It went past it, as it often does in a rush. It's a big shoot up and overstretch over the key resistance area. But it's starting to feel a little bit of pain now. You can see that we're starting to get 3 candles of weakness now. You can see here that we're this rectangle box, or this box that I've drawn here, is pretty much the go zone for it. If you go to the smaller time frames, what this is effectively doing is trying to lightning bolt down. If we get a 4 hour close below these moving averages, you could see this easily tracking down to probably that 113.20 in the first instance, and failing that, if that level doesn't hold, we're probably going to head back down to the 112 again, which is this green horizontal line here. So just one of those ones to watch. Look, if it bounces up from here, if it finds support at around this level, it's nearly at 114 at the moment. But if it pulls back a little bit further and gets to that 113.20 and then reverses and pushes up, I wouldn't mind that either, because it gives us a very clear target for the way up. And if it does come up with momentum, it's a chance of potentially breaking it. Now, although this is historically extraordinarily strong resistance, it doesn't mean that it's not going to go through it. It just means that, it's not going to go through it in the first instance as a rule. But if it comes up and has a resurgence and tries to break through from a level of maybe 113.20, which is a reasonable pullback on a half decent time frame, we're talking about this level here. If it pulls back to there and then pushes through and tests a high again, I'd be almost inclined to start thinking it is going to go longer. So it's just one of those ones where you've got to really let it play the game. If it breaks down, we know we've got a very clear target of 113.20. And if it breaks up to the upside off the 20 moving average, then we start aiming for the 114 again. So scalping again until we effectively get a breakout past that 114.50 good and proper, and maybe retest that level from above. So we turn that into a roll reversal zone, and then it gives it all the support that it needs to actually push on. Okay, we'll move on now to the dollar index. The all-important dollar index has found support where we wanted to find support, which is good. You can see here, this 93.50 area, touched it twice, so it's a roll reversal zone. It touched it twice on the way down, and it's starting to pick up a little bit of momentum on the way up now. Look, I don't want it to get trapped by this 20 moving average. This will not be ideal. We do need to see this above and trading above here on a daily candle and holding up above it especially. I really would like to see this finish up here before the end of the week. If we get a daily close above the 20 on the dollar index this week, which is basically today's the last day, that's going to bode very, very well for some movement next week. So, and of course that's going to basically short the euro if this happens. So what we want to see is a daily close above the 20 moving average. That will be effectively shorting the euro. What we don't want to see is a trap between these two zones here, because if it does that, it means that the euro is going to be a very flat trade in the near term, which is no fun. We want it to move, obviously, all right? So one way or the other, we want to be able to trade it because it is one of the best trading pairs. So ideally, we're going to look for a daily close above the 20 moving average. Failing that, we want to see this actually break down. It's got to do one or the other. We don't want to see that trap in between. So we either want to see a daily close below the 93.50 or a daily close above the 20 moving average, which is around that 93.80. If we get either of those, the euro is going to do exactly what we need it to do, which is actually break out of the little range that it's at. So keep an eye on this one. Really good roll reversal zone, though. I do like it. We just got to be careful that we don't get trapped in between these two very important squeeze zones. We'll go over to the euro now. Look, the euro is wanting to basically short off this level. It tried to get up above the 20 moving average. This is still in a dead set downtrend. Make no mistake about that. It has not reversed its trend. And that's why I'm probably more keen for the dollar index to go up than down, because I think it makes a bit more sense from a technical standpoint. It's going to be a bit of a battle to get past this level here. I do appreciate that, but at the same time, I think there's some good trading to actually get there. So realistically, we'll go to the 4 hour. That looks like it's double topping on the 4 hour. You can see here it's fast approaching the neckline. It's trying to break past the 20 moving average. This is not a bad trade if it actually does play out. This head and shoulders will be head and shoulders, sorry, his double top will be the distance of that to that, which brings it in line to that support zone there. So when technicals line up with other technicals and support zones, you know they've got a little bit of extra power. So definitely potential for this one. We want to see a break of the neckline. If we see a break of the neckline on a 4 hour, that's the target we're going for, which is around that 115.70 area. Makes a lot of sense. It's previous support, and that will play the pattern out to exactly where it needs to go. Got a little bit of work to do yet, but it's certainly tracking in the right direction, right? So we know it's doing all the right things. Oh, it's a pretty ordinary, there, I'll make that straight. So that's what we're looking for. That's what it looks like on an hour. It's your double top. Neckline is approaching. The danger with this neckline, of course, is that it's got a basically roll reversal zone where the neckline is. So it's got a bit of work to actually break this neckline down because we've got previous resistance at that same level here. You can see here and here. It needs to break that at the same time it breaks the neckline to make this pattern work out. But in saying that, if the neckline does break, it gives it a bit more power and a fair bit of momentum to push down into that 115. This is only a scalp, right? Like I'm not talking about 150 pips here, but at the same time, it's a good little scalp, and you could definitely see it getting there if it does break that neckline. So good trading. Failing that, if it does reverse at this point here, so if we see a 1 hour change of trend where we get a series of higher highs and higher lows from this zone, then we aim for the previous highs again. So we're aiming for those, probably 116.60 to 116.80. Again, scalping on the way up, but until it breaks out of this zone, we'll happily trade it. There's nothing wrong with scalping when it's in a scalping zone, so that's what we're looking for on the euro. All right, we'll go over to the US 500. We'll look at this one last. This is effectively trying to push to an all-time high. As you can see, it's had one hell of a run over the last few days. Whether it stops here or not, I guess it's anyone's guess, really. I mean, from a technical standpoint, you would probably think it's going to find resistance at this point here. It is at an all-time high, but this is behaving a little bit peculiarly, so we would probably just watch it and let it do what it needs to do. But if I see any sign of weakness at this level, and by that I mean a series of higher highs or lower highs and lower lows on a smaller time frame, right at this kill zone, which is the all-time high level. We go to the smaller time frames. You can see that it's been pushing up, very, very strongly. Like there's no questioning this trend. Earnings season's going very, very well for it, so that's helping. It's certainly helping it along. I would be, thinking that we've already had the pullback now that we're probably going to see. There's no real reason with earnings so good. We've had an unexpected surprise, I guess you could say. You would think that the market strength would probably continue. I'd be looking for a bit of a pullback around this zone. When markets consolidate very closely to the level that they want to break, they don't generally approach it with as much momentum. So you can see here the last few 4 hour candles have kind of found a little bit of consolidation through this area, and you can see it's kind of double bottomed here a little bit. Not much of a double bottom, but you know what I'm talking about. Both troughs at a similar level. So I would be thinking it might be a little bit weaker at this point here. I'd be looking for those reversals. I'd rather go short than long on this, but not for very long. I would probably be only shorting it to a key level, like maybe one of these roll reversal zones down here, maybe 44.80, and then look for a pull up off that level, a series of higher highs and higher lows. Let it approach with momentum from a bit deeper, so it actually can build up a fair bit of momentum to break that zone, and then it'll probably push onto all-time highs. I'm not keen on taking the all-time high straight up. I would rather wait and be a little bit more patient with it. And the reason for that is it's a better trade after it's done what it needs to do, breaking that level. So what I mean by that is if it breaks up and closes above the all-time high and then comes back, most of the time it'll come back and retest this level from above. That becomes a roll reversal zone, and that becomes a lot stronger push-up. At that point there, you'd be looking for long opportunities, because then you've got the roll reversal and you've got that resistance that will now become support to help us along the way. So look, good trading either way coming up. I think we're going to be in for a really good finish to the year, and we're starting to set up with some of these key zones. So hopefully you're able to take part of some of those really good moves this week, because I think we've had some really nice technical setups. So I hope everyone's had a great week. I look forward to seeing you all next week. We'll see if we can get some trends happening. Have a great weekend, and I'll talk to you soon.